Hi, Andrew Cooper, Advice for Living Financial Planning. This will be my last video for 2021, so I wanted to let you know our arrangements. We'll be finishing up for Christmas on this Friday, December 18. That will be our last day in the office, and we'll be reopening for 2022 on Monday, January the 17th. That's a slightly longer break than normal for us, but it's been a big year. So we will be taking just a little bit longer than normal. Also, for anyone ringing, on Thursday, we're having our staff Christmas luncheon. So we'll be here in the morning, and then if you call in on Thursday afternoon, we will return your calls on Friday. So finish up this Friday, back on the 17th next month, and out of the office on Thursday afternoon. Now, I wanted to do a wrap-up of 2021 and some thoughts on that and maybe what might happen next year. First off, share markets have had quite a surprisingly good year, despite what multiple fund managers predicted that it was going to be death and destruction. The returns from share markets both in Australia and overseas have been excellent. The Australian share market, the ASX 200, returned over 10%, almost 11% this calendar year, and the US S&P 500, so that's the 500 biggest companies on the US market, returned almost 30% this year, 29.6 roughly. So it's been a big year. So those of you who have had quite aggressive portfolios will have had very good returns. Those of you with more conservative portfolios, the returns will not have been so good because the conservative parts of your portfolio, which is the government and private sector bonds, have not returned very well. Because interest rates have tracked down to almost nothing and are now actually heading up a little, there is a time lag with investment bonds. So even though they've been paying the regular interest, and that has been running down as well, the actual value of the bonds themselves has decreased. But as interest rates go up and continue up next year, we should expect to see the value pump back into those bonds and the returns increase. So hopefully that will do well. In terms of the share market, as many of you would know, I have been concerned through most of the year that there will be a correction. We had thought it would be during the year. Lots of people predicted it, but it has continued on. And so we would have to expect the correction will come sometime next year if interest rates go up, and the indications are certainly the US Federal Reserve, which is their reserve bank, has finally admitted that the inflation in the US, which is running at about 6%, is not just transitory and not just related to the supply chain issues, that it is embedded to a level, and so they are going to need to move on interest rates. Once they do that, there will inevitably be a cooling off in the share market. Now, the thing we don't know next year is about what will happen, because one of the things that I've mentioned to a number of you in reviews is that normally the share market is driven by institutional investors who are, investing on behalf of super funds and investors and that sort of thing. What is happening at the moment is that the share market, certainly over the last really 2 years, has been driven by mum and dad investors sitting at home on the couch during the pandemic with plenty of time and with some pandemic money to spend. So what they will do when the share market begins to correct is a thing we don't know. They may stick with it. They may go, well, look, we've had the ups, we'll take the downs, or alternately they may all panic. And if they do that, then we would see a fairly quick and possibly fairly substantial share market correction. But we don't know what they're going to do. We know what institutional investors will do, but not mums and dads. So as a result, with our reviews, we've generally been saying, look, stay fully invested, because there is nothing we could recommend that will necessarily do any better. So it's a matter of stay where you are, and we'll just see, as I say, and we'll keep watching this space and see how it goes. So that's investment markets. In terms of the other side of our business, of course, is insurances, personal insurances, life, TPD, trauma, income protection. The government this year intervened in the insurance market because they were concerned that premiums were unsustainably low, and so they have pushed insurance companies to both increase their premiums and increase what they call their prudential allocations. That has meant that obviously insurance premiums have gone up, but there is more to come, unfortunately, and there's a couple of reasons for that. The first reason is, as I said, they have to keep what are called prudential allocations, and this is basically big chunks of money that they have to keep invested relatively conservatively and relatively accessibly in order to pay claims. That amount they have to keep has been increased, and in addition, what's happened over the years is that the amount they can earn on those prudential allocations has diminished to almost nothing. 8 or 9 years ago, they could be getting 6-8% on their term deposits or government bonds, which is where they would have their money invested, and this could help to cross-subsidise their premiums. So because they were ahead of inflation, they could keep their premiums lower. What has happened, of course, over recent years is that the returns from term deposits and government bonds have diminished to almost nothing, and so they can't cross-subsidise anymore. It's just a simple matter of arithmetic. And in addition, the federal government is making them keep more money there, so it's becoming increasingly difficult for them. And the second thing is they have had a huge increase in claims, over the last 2 years, particularly mental health claims and particularly for income protection. As a result, they have been forced to quite dramatically increase the cost of income protection premiums, and we will see more of that next year. Unfortunately, even level premiums, which we're always told would stay the same, and even those are going to have some quite substantial increases. So I think next year, when some of those increases get into place, when people get their renewals, if we're having insurance reviews, then there could be some quite difficult decisions for people to make. Unfortunately, for income protection, it's not just a matter of jumping off and going to a cheaper policy, because the new policies do not have as good a benefits as what the existing ones do. So if you've got a policy you've had for some years, it's inevitably going to have better benefits, but it's going to cost more. So there'll be some interesting discussions to go on there, and we'll do our very best to provide you with the best advice on that front. So that's about it, probably in terms of what's been going on. As it's our last one for the year, can I say a huge, huge thank you to all of our clients. Thank you for your continued support. Thank you for your good humour in dealing with us, particularly this year when we have been overrun with new compliance requirements. Thank you for being good enough to put up with all the extra forms and the changes and that sort of stuff. It's been a real annoyance for us. Unfortunately, what has happened, if I can have just a quick gripe, is that the Banking Royal Commission a couple of years ago investigated stuff that the banks were doing in terms of financial planning, which was awful, and so they imposed a whole lot of new rules to make them up their game. And then the banks looked at the new rules and went, wow, this is far too hard, we're not going to do this anymore. So they all bailed out of financial planning and left little suburban planners like us, who weren't doing the wrong thing anyway. They've left us with a whole lot of regulations that don't impact anything we were doing wrong or any of that sort of stuff, but we're stuck with them. So unfortunately, we've had a much increased compliance requirements. So thank you for your good humour with that. It's been a real annoyance for us, and part of the reason we're having a bit longer this year. So thank you all so much, and we look forward to seeing people next year. I hope you have a great Christmas, a great New Year, and let's hope Australia keeps winning the cricket in the way they won the first test. That would be really good, and we look forward to seeing people next year. And so as always, any questions, any issues, do please, of course, give us a call. But as I say, Friday this week is it for us. Thanks so much. Bye.